Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates. With the final trading session of the year and what a year 2023 has been. It's been the year where Fed has raised rates more than what anyone, including the Fed in 2022, estimated. It's been the year where we saw geopolitical events play out, bank failures, and many more. Good morning, JK. Take us through 2023. What, according to you, were the highlights of the year?
Good morning, Swaraj. Yeah, just before we review what was 2023, yesterday's price actions in the markets, not much to write home about. But for a change, rupee also moved, along with the dollar index, gaining a bit, around 15 paisa, based on flows and less intense buying from PSU banks. But all within the range, well-known range of 83 and 83.30. As far as the global markets are concerned, the dollar index did make a new low at 101.40 and euro new high at 1.1140. The dollar yen also tried to break 140, but was not successful. But I do think these levels were a bit on the extreme, considering we had almost a 3% move in the dollar index this month alone. And no new developments apart from what the Fed said in their meeting, and a lot of it has been discounted. So in the end, we saw some profit taking from players on the currencies, definitely. And the correction was also triggered by some hawkish statement from ECB member Mr. Holzman, who said rate cuts in 2024 are not guaranteed. So that was a very strong statement, although he himself is a big hawk, so market did not see him, really influencing the rate decision. They would probably like to hear from other ECB members, or perhaps Lagarde herself. Now, looking back at 2023, I get a feeling that it was a kind of market version of a Bollywood masala movie, where everyone had something to make money from. There was everything there. Financial market that could experience. Inflation was the villain, starting at 6.5%. But then there was a great moderation by authorities, raising Fed funds rate from 4% to 5.5%. We had a war in the Middle East. That was you can say it was the version of fights that you see in the movies, but then it is still ongoing. No end to the Middle East war or the Ukraine war, although a lot of efforts to contain it has been on the offing. We had a banking crisis, but then that was again handled by the authorities by providing a lot of liquidity. Still questions remain how healthy the smaller banks in the US are. Brent, of course, was only a sideshow because despite all the negative news, Brent prices on a year-on-year basis, they have been down from 85 to 77. And this is mainly driven by, the higher production from US and the new finds in some regions, as well as higher, supplies from Venezuela, despite output cuts from Saudi and also Russia. I would say hero was definitely the equities, because S&P 500 26.3% rise for the year, 11.6% this quarter, and 5.5% this month alone. And Nifty was not left behind with 20% rise. Global index was up 20%. So in my view, this was the real, hero's performance. If you look at the bonds, they were the entertainers, because bonds started at 3.84% in 10-year, and now it is at 3.85%. Of course, in between, we had the low at 3.25 and high at 5.02. I'm talking about the benchmark 10-year bond yields in the US. So as we are in the last day of the trading year, market is discounting as much as 3 cuts in consecutive months, March, May, and June. And that's 0.75% by middle of next year. Surprisingly, not a very insignificant development is that 16% probability of a rate cut as early as January meeting, but I completely rule it out. This is actually a fight between market and the authority that is going on. Authorities keep pushing back against the market expectations. The heroine was, of course, the gold that really shone in the latter part of the year, moving from 1800 to 2080, a gain of 15%. Yes, we had some laggards, like Chinese Composite Index actually is down 3.5% compared to all other markets which have been, down. Then the supporting role was clearly played out by the dollar index on a year-on-year basis, 2.5% down. Major performance by GBP, which is up 5.3%, but USD CNY is also 2.6%. In other words, dollar has gained against the CNH at 2.6%, and we might as well close, at all-time highs as far as the gold is concerned. That is the what it is indicating. Now, despite all the talk of India leading world growth, rupee had only a guest appearance in the year, hardly made its presence felt. A lot was talked about, lot was expected, but that really did not materialize. The suspense of the year was always a recession, a lot of yield curve inversion, volatility within the inversion, sometimes steepening, sometimes inverting more. But in the end, economies have sustained. We did have recession, of course, in Germany, the largest economy in the Eurozone, but US economy has maintained its outperformance against other economies. Now, as we step into 2024, a lot to look forward for the next release. The trailer shows rate cuts possible, recession not ruled out, political dramas all around in many countries, including India, and the suspense, of course, will remain with geopolitics and the Chinese economy. But it's going to be unique, where the hero will be known only later. The choice will be between gold, bonds, and equities. I personally prefer gold as the outperformer or the hero of next year. So overall, a lot of entertainment, making money-making opportunities. But if you are a rupee trader, you want to pray for USD INR to move and not just Euro INR and GBP INR. So a very volatile year. Just to be on a more professional note, it was a very volatile year for most of the markets, and I don't think volatility will be lesser in going forward in the new year. Of course, there can be new themes. China can be, a bouncing market, and then India may see some two-way volatility instead of one-way volatility as far as the stock market is concerned, because it's moved a lot, and the rupee will be on the real radar because of huge inflows expected. Dollar can see some corrective move because it's at major supports, but on a structural basis, dollar will be down. So that's it for the last coverage of the year 2023. We'll be back with our coverage on 2nd January. 1st January will be relatively almost no market in India, though officially there is no holiday. So we'll see you all in the 2024, and best wishes. Thank you.
Thank you, JK. And of course, the entire year was very well summarized by you. And truly, it was like an Indian soap. So many different events playing out. Now we look forward to 2024 and the events that might unfold. So do tune in on Tuesday as we bring to you what to expect from the markets in the coming year. That's it from us today. Thanks to all of you who listened to us, and wishing you a very happy and prosperous new year ahead. Thanks for listening.